I fully believe that 5 years from now, we're sitting here, every single financial mobile app on your phone will be run on blockchain rails. As that happens, DeFi activity, DeFi TVL, DeFi usage will grow exponentially. But Solana is still only 120 billion.
Welcome in, everybody, to another episode here on Coinage. As we are digging into the big trends, the big headlines per usual. A day removed from the Fed's big rate cut, and of course, big questions around what that means for crypto and where we go from here. So super excited to have back on Coinage with us the man, the myth, the legend, Pantera Capital's Cosmo Jiang on Coinage today. Cosmo, good to see you, man. Thanks for coming back on.
Hey, Zach, thanks for having me. Love being here.
Yeah, it's a big day, not just for kind of, this next chapter. Obviously, September has been known as Downtember, but now is different, I think, because Q4 is just around the corner. And what makes this cycle different is obviously what you've been focusing on with Helius, the latest Solana DAT to enter the space. So excited to dig into that and what it means for, I guess, continued excitement, continued merging of traditional capital, where you come from and your background as kind of a more traditional investor, and now what we're seeing trickle into crypto. So thank you for coming on. I think we got a lot to dig into over the next 30 minutes or so. But where do you put us at, I guess, in this cycle? What are you seeing right now in demand when it comes to not just DATs and Solana and understanding kind of everything beyond Bitcoin, but how do you see this time potentially being different?
Well, I mean, look, Zach, you need to rename the moniker for September. Clearly, it's Solana September, and it will continue to be. The reason why the big theme of this year is really the equity markets embracing digital assets exposure. So, what do I mean by that? It is Coinbase and Robinhood performing extremely well in the equity markets. It's the incredible reception that crypto IPOs like Circle, Figure, Gemini have received in the markets. All our investments. It's been this rise of these digital asset treasuries, which, I certainly didn't anticipate the incredible reaction and reception they've gotten when we did the first deal and we helped structure this industry. But wow, it's been incredible to see that there's been, 10, $15 billion of assets raised for digital asset treasuries to start. And then there's been tens of billions of dollars of value created. And so all that is to say that clearly equity investors are choosing to deploy into digital assets because it's just so important now.
It is, and I mean, I think, at least when it comes to Solana, we'll stick with the theme of it being Solana September. I got a couple Solana questions for you because it is interesting to see kind of Bitcoin DATs and Ethereum DATs. The one differentiator that I think is important to highlight with Solana DATs is that there are no yet approved kind of Solana ETFs, though we have, last time we were chatting with you out here at Solana Accelerate, actually, was the idea of how far along those ETF approvals might be. And when it comes to Solana DATs, is there anything distinct to maybe highlight around how you see fund flows continuing and whether or not a Solana ETF may impact the attention and excitement around Solana DATs?
Yeah, I mean, the bottom line is I think the launch of Solana ETFs are great for everyone. They're great for Solana, they're great for increasing access, and they're really great for Solana DATs. I say this because if you look at, like, a DAT is a very different vehicle than an ETF. A DAT gives you access to the management team and their execution and the ability to pull forward a lot of growth and deploy into more interesting forms of yield generating strategies other than just staking. And so I think for a lot of reasons, DATs are just a totally different exposure than ETFs, and ETFs really just help accelerate it by helping people understand what Solana is. I think, as part of when we first underwrote the first US DAT, I went back and really had to get myself acquainted with how did MicroStrategy react when the Bitcoin ETFs came out, right? Because I think a lot of people, and especially from my old world, I come from traditional equities. Most of my friends are partners at Tiger, Coatue, all these places. They would tell you that MicroStrategy trading at 2x, that's gonna fade as soon as the ETFs launch. But the exact opposite happened because the ETFs increased the ability to tell the story about Bitcoin. It actually caused more people to be interested in it, and they went to look for what the optimal exposure to Bitcoin is, and some of them chose MicroStrategy. And so strategy actually ended up trading at a higher multiple and performing better than Bitcoin post the Bitcoin ETF, which defied a lot of expectations, but I think is very understandable as we look back now, and I'd fully expect that to be the case for Solana.
Yeah, and I think, I mean, obviously, too, when it comes to the excitement of, if you have a lot of people expecting a Q4 to be pretty historic in the sense of, the way that it's usually a strong period for crypto, obviously excitement's there, but also, as I said, kind of what has already happened with DAT. So maybe a DAT specific question, Cosmo, because obviously you guys have looked at these things, and now Helius being live, it's a pretty large one when it comes to buying up Solana and staking Solana. I mean, writ large, how has the conversation gone around what DAT seek to do to kind of do things differently than maybe what you can do with Bitcoin by actually earning yield on the underlying asset itself? Has it been hard to
Yeah.
explain that?
Yeah, absolutely. I think maybe it's helpful to go back to why we're even talking about yield and what makes it that really special. As an investor, the reality is I boil everything down into numbers. Like, what do the numbers actually tell me, and why is that? Why is this interesting? And I think the magic of what MicroStrategy did and why it actually makes sense to buy a debt at a premium to NAV is the whole idea of that you can grow your NAV per share greater over time by owning a debt than by owning just spot. So, for example, MicroStrategy trades at 2 times NAV, and so if you're buying MicroStrategy, you're buying the equivalent of half a Bitcoin versus going and buying 1 Bitcoin, which sounds crazy, right? But the reality is, if they can generate yield by tapping the capital markets for share accretive transactions, by using their Bitcoin in some productive way, they can actually grow their NAV per share such that last year they grew their Bitcoin per share by 75%. This year they've grown it by 40%. So you actually are better off on an underlying NAV basis having bought MicroStrategy at the beginning of 2024 than you would have been buying spot Bitcoin. And so that's pretty interesting to realize, is that these DATs have all these tools they can use to increase your Bitcoin per share, or in our case, increasing your Solana per share. And so for Solana, it's a lot of the same things, which is you're able to tap the capital markets, do share accretive transactions by accessing an ATM, by selling volatility through convertible debt. But on the other side, what makes Solana better than Bitcoin for a debt is that there are way more ways to generate productive yield on top of your Solana, you know, whether it's just basically staking. As Pantera, we have the best relationships possible with all the staking providers. Most of our staking providers actually work with us on a cost minus basis, so they operate at negative gross margins in order to work with us, and we're going to pass along those benefits to our to the DAT that we're helping manage at HSDT. HSDT will also be able to, if it makes sense, deploy into DeFi to find higher yield opportunities for Solana than just staking or other options, which we think is also exciting. Now we need to see DeFi continue to grow, and we'll be a big part of that. But as those opportunities expand, you can see us deploying more and more and generating yield in very, very interesting ways.
Well, I think that's the interesting thing around like a rising tide lifts all boats kind of mentality here when it comes to kind of how, I don't know, I would be a curious question is like looking at other Solana DATs as competitors, but you're also kind of chasing the same asset and then holding it. And then, like you said, trying to find ways to leverage it. So I don't know if it would be fair, if you'd even agree in framing things around like competition among Solana DATs. Obviously, there are other ones that are also raising significant chunks of change as well. But how do you kind of see maybe that being the case around, not just you guys scooping up Solana, but other people doing the same? And of course, also, your partners at Summer Capital bringing in Joseph Chi as well. How you're bringing in other people that might not have even kind of been as deep in the sauce as Pantera's been.
Yeah, I mean, look, we love being in the sauce, and we love to invite people to join us too. The reality is, what makes that so exciting is it's all about your ability to tell the story and evangelize why we're so excited about Solana to a whole new set of investors, right? Like, I think any DAT that is focused too much on crypto natives is just not doing your job, because you're just rotating capital amongst the same people. We think our responsibility as the earliest fund investing in blockchain, as people who started the DAT trend, as people who care deeply about Solana, our responsibility is actually to tell the Solana story and the DAT story to a whole new set of investors. And so, from our perspective, that means really introducing it to Main Street, right? Main Street and mainstream financial media, because that's how you bring in incremental capital into the space, and that's how you get everything to really grow and not just be a circular rotation. And in the US, that means Pantera is really leaning in with platforms like Coinage, with other platforms like CNBC, to really tell the story to a whole new set of audience of people. And then using our distribution that we've built over the last 10 years, I don't know if, back in the day in 2013, when Dan Moore had transitioned this fund to be fully blockchain dedicated, he was literally knocking on doors asking people to preaching the gospel of Bitcoin, and when no one else was listening. And so over that time, as a result of all this, hard work, we have built this incredible distribution of people who really come to us for education. And so we have this massive distribution list that we're leveraging to really tell the story. And then we partner with Summer Capital in Asia. Summer Capital is started by Joseph Chi, who was the head of UBS Asia Investment Banking for many years, basically during when China grew up, right, in the 2000s and 2010s. And so our ability to access and talk to long only managers, TradFi managers in Asia has really expanded the pie quite a lot, more so than I think other DATs have done today.
Yeah, the interesting piece there on Asia is another one because so many people focus on the idea of what's happening here in the U.S. and obviously you and I both being kind of based out here, and the idea of U.S. regulation being squarely in everyone's in the back of everyone's mind. Certainly, the U.S. is going to get a lot of attention, but increasingly, I was just out at the Real World Asset Summit on a panel. I don't know if you were actually going to be on that one too, but it was Apollo and BlackRock and everyone talking about kind of institutional demand around the globe. And to your point, it does seem like there's just a lot of people waking up to the idea, and I don't want to say it's all FOMO, but the idea of they don't want to be caught behind. And it seems like these DATs significantly are giving people the opportunity to touch an asset they've never been able to. And I think that that's also maybe perhaps, Cosmo, if you'd agree, what was overlooked about what Strategy and Michael Saylor was doing in terms of giving access to the Bitcoin beast, as it were, to people who normally only operate in debt or bonds.
Yeah, I think that's exactly right. We've realized this year one of the big things is you just have to meet people where they are first, and then you can expand the pie and bring them and then sort of bring them to where you are. But it's so important. Like it has, and we have to just be honest with ourselves. It's been hard to get people over the hump on digital assets, right? And our job is to really grow and help people understand why that digital assets are going to be very disruptive. And it's way easier to just go to them where they are and tell them that, like, hey, if you really want to get involved, you don't have to transfer your money from your Fidelity brokerage or Robinhood brokerage over to Coinbase. Just stay there. We'll meet you where you are. We have this token in an equity wrapper, or this DAT HSDT that you can go and observe. And if you're interested in participating, that is one way to participate. And clearly people are, for better or worse, very comfortable in their brokerage accounts, very comfortable with all the systems that feed into that and do reporting if you're a traditional fund. And so let's just meet them where they are.
Yeah, no, I mean, it makes a lot of sense. And I guess to kind of double down on where we are now as HSDC gets kicked off, it's getting kicked off at a time where the Fed just cut. And you and I have an appreciation for kind of the macro things that still impact and matter in crypto. And I think it's interesting to think about some of the other DAT life cycles in terms of them coming out earlier, and then tariffs hit, and then maybe they didn't get the attention they deserved. Now with HSDT coming out at a time that the Fed just cut, I'd be curious to kind of get your take on what you're expecting to see just from a macro level now, and where I guess you put maybe some of the room to run still there on Solana, just kind of given the macro factors at play.
Yeah. Well, I think there's a few things there, right? Whenever I think about the markets, there's a few different levels. You need to think about what's happening on a macro basis, both short, medium, long term, and then you need to think about what the industry specific factors are that are important. And so from a macro level, I mean, look, things couldn't look better. The underlying U.S. economy remains very strong. The AI capex spend continues to stay abreast, and so we continue to expect a lot of investment in the U.S., which is great. And then you have the Fed starting to cut, which is obviously whenever rates go down, that's very good for risk assets. At the same time that the big beautiful bill passed, so there's increased U.S. spending, and there's a stimulus across many countries across the world, including Europe and China. And so you're seeing this increase in spending, this increase in this lowering of rates, and continued productivity on the corporate side, all which is very good for asset prices. There's a question of what that means for inflation and what that means for what that means for real growth. But on a nominal basis, which is how we all live our world, on a nominal basis, things look really, really great. On the macro level, on a crypto level, Man, I think you and I have talked about this before, but this year is just about so many of those headwinds that have been holding back the industry for the last few years, really becoming tailwinds and propelling us forward. And in particular for Solana, like one of the big things is all these companies have wanted to interact with Solana and integrate with Solana for a long time, and now they feel like they can because Solana is now on the leading edge of uh, uh, of of tokenization, of stable coins, of real world asset issuance, of DPIN, all these things that are real world productive use cases that companies actually feel comfortable engaging with now that we have regulatory clarity. And then the other piece is access, right? We think the evolution of DATS has been fantastic for increasing access to the asset class, and that's bringing in a lot of new investors. You know, we've seen we at Pantera have been a part of the story of all these Bitcoin DATs launching first, and then ETH and Bitmine, and working with Tom Lee on that. And we just saw how powerful that was for driving Ethereum adoption, and we just thought, man, it's really we have the burden or responsibility to do that on behalf of Solana too, which is why we're launching a Solana DAT, because we think we can recreate that same success or some level of that same success that Tom Lee saw with Bitmine that we can do with HSDT and Solana. And then this really dovetails well later this year into the launch of the Solana ETFs. We think we mentioned at the beginning of this conversation that the launch of ETFs is actually very positive for DETs. And we think that it seems like all signs point to, and we just had the SEC, pass new registration guidelines yesterday that basically enable ETFs to be launched for assets like Solana imminently. And so we'd expect that to happen over the next few weeks, which will be, I think, a very, very positive catalyst for adoption, which will drive usage, which will drive adoption, which is all the positive flywheel of a network.
Oh, I did want to ask about that too, because you're right. You guys have participated, Pantera, in quite a few of these stats, and not just like, anyone can kind of participate in them, but it's another thing entirely to say, hey, we're going to participate in the leading ones for each one of these assets, whether it is kind of what Tom Lee's built, and I'll be speaking with him out at Korea Blockchain Week about Bitmine. But the idea of participating in a Bitmine for ETH, in participating with an 8co for kind of the WorldCoin DAT, as it were, and now with this one in Helius for Solana, I am kind of curious to get your take on what the future for these DATs looks like, because we are seeing, I think it's about like 25% of like Bitcoin DATs now trade below NAV. I wonder if you're also in the camp that, look, because anyone can kind of spin these up, it's going to be certain ones in each camp with each asset that will rise above the fold, but it really comes down to who are the people attached to them. Is it the Panteras of the world, or is it the Tom Lees of the world, versus everyone else who's trying to do the same thing, and how you see that shaping up if the same trend might spill over from Bitcoin DATs, as we're seeing some of those trade below NAV, to other assets as well. Is it really the case that you see maybe 2, 3, 4 of these in each camp maybe rising above the fold?
I think that's exactly right. I mean, look, if we go back to when we anchored the first DAT investments here in the US, I mean, before I had come up with a moniker DAT yet, I thought I was calling them MicroStrategy copycats at the time when we were writing
Too
the
many
memo.
words. Far too many words.
And at the time, I thought DFDV, which was our first investment, when no one else was giving them the light of day, we took what was then a very non-consensus bet, because I felt like we had really underwritten why we think this business model makes sense, and that we could see it being recreated for something outside of Bitcoin, and maybe be even better than something outside of Bitcoin. And so that's why we did the DFDV investment. And then when we go to when we evolved from there, I was like, well, I thought that'd be one and done. And then the next week, Cantor, Tether, SoftBank called me saying, hey, we saw what you did with DFDV. We'd love if you would come into our deal. We've been thinking about a Bitcoin one for some time. And I was like, well, yeah, I think that could make sense. There could be multiple Bitcoin ones, because I do. And then I thought at that point it'd be two and done. Fast forward to today, we've taken over 150 pitches. We've invested in over 20 of these DATs. Pantera has actually deployed over $500 million into DATs, now worth over $1.5 billion. And so it's been pretty incredible to see that evolution over time, and it becoming a big part of what we do. And as part of that, I felt like I'm very humbled to have been allowed to be there at the beginning, and very humbled that a lot of teams, bankers, lawyers, sponsors feel like they want to call us as one of their first calls or first few calls to really understand how ADAPT works. And we do our best to try to provide that advice and help all these come to life. But as I take a step back, I'm like, over the long term, there's probably going to be 2 or 3 large stats for each of the major assets, right? Bitcoin, ETH, and Solana. But that for the most part, everyone else is likely going to trade at NAV or maybe a slight discount to NAV, and that's just the natural state of things, right? These are very capital intensive businesses, and capital intensive businesses tend to consolidate into an oligopoly over time, or at least that's my observation, having invested in traditional markets for a decade, and so I expect there to be two or three leading Bitcoin ones, two or three leading ETH ones. But for Solana, the story really hasn't been told yet. And so it just felt like, wow, we've built all this expertise, all this knowledge. People come to us for advice. And we care so deeply about Solana, but the story hasn't been told yet for Solana in a big way. Man, it feels like we have to, and we have the responsibility to really do so. And that's why we launched HSDT, to be the leading, or maybe just one of the two, three leading Solana DATs over time. And that's really our intention and our goal.
Yeah, from talking to a few people too, it does seem like, I don't know, like I said, anyone can kind of try and operate in this arena. It doesn't necessarily guarantee success in being able to raise and launch one of these DATs. And from what I had been hearing, just kind of talking to some people in the industry, it did seem like maybe some of that earlier excitement in throwing capital into these things was starting to wane. And maybe some people out there could be more in the fearful camp. And again, I don't fault anyone who lives in crypto to always constantly keep their head on a swivel, because we've seen some collapses in the past. But I don't necessarily believe, to your point on the idea of NAV, kind of the idea that, okay, if capital dries up, suddenly that's a huge problem in the space. We've been seeing a lot of journalists kind of say that it's going to be a huge problem in the space. And it very well may, depending on where you're caught in that kind of camp of, we're only 14th on this list of the top DATs. But how do you kind of see some of that playing out for maybe if the capital goes through that cycle? Would you also maybe caution people to not expect the worst of the worst if capital dries up in forming new DATs and letting kind of this consolidation among the DATs happen naturally?
Well, I think that will naturally happen, right? I do think that, to your point, it seems easy to start a debt, and I think you see this with the genesis of any new set of companies. We have to take a step back and realize we've created a whole new category of businesses, right? That really didn't exist in a major way before. It was just MicroStrategy and Metaplan, and that's it. And so we've unlocked the creation of a whole new category of companies, which it only happens once, right? The creation of a new industry only happens once. And no wonder that everyone is rushing in saying that they want to raise their hand to be the leading Bitcoin, ETH, Solana, XYZ DAT. Makes sense. Now, there's going to be a lot of people that try to do that, but only a couple that will rise above and really succeed at doing that. And you see that with any set of startups, right? There's thousands of different people trying to launch XYZ AI startup or XYZ crypto startup. And you'd expect that, 999 of them will fail. And that's normal. That's totally reasonable and totally normal. And so that doesn't bother me very much. Our goal as investors is to try to do our best to find who are the two or three leading ones, but we're going to make some mistakes along the way as well, and some of them won't turn out well, and that's totally fine. That's the nature of investing. And so when I think about there's certainly a lot of consternation about some of these DATs trading at below NAV, and some of them having difficult raising. That's just like very normal. That's how capital markets work. But there will be two or three leading ones that really succeed and consolidate over time. I think that's a real opportunity. And so right now we're seeing some of that digestion, and I think 2 or 3 months from now it'll be pretty clear how it levels out.
Would it be fair to maybe consider a future in which, because I don't know if you would agree that kind of the comparison point here might even be Bitcoin miners. And we saw kind of their valuations too go in flux depending on what's happening with Bitcoin, but a lot of them were just kind of poorly run businesses. Even though they were Bitcoin miners, it would certainly be unfair to say that Bitcoin miner is the same as that Bitcoin miner just because they do the same thing. I would say probably the same thing with DATs. And the idea of consolidation that then came after, we saw a lot of Bitcoin miners kind of come together and try and compete together. Do you think there might be a world where maybe some of these DATs start buying the other DATs because they're below NAV, and maybe that's just a different way to go? I mean, how do you kind of see this shaping out, and is that even a fair comparison in your mind?
Oh, absolutely. I think M&A will be huge in this industry, especially as it consolidates. This is something that I started floating into the idea of various entrepreneurs. I think three-ish months ago, as I started to see more of these pop up, and especially as I started to see more sponsors that just like really didn't understand how this works. And that's fine. But it just became clear to me that there would be a real opportunity to roll up some of these guys over time. And so I fully expect that the leading DATs will approach DATs that are trading at NAV or below NAV, it becomes really accretive for you to go out and buy them. And so I think it makes a ton of sense. And, you know, we anticipate that we will be part of that process of helping consolidate industry at HSDT. And I think that's a real opportunity.
Yeah, for sure. And I think obviously, again, as we see kind of everything play out, I do think it has been interesting to see the market wake up to some of these and to see maybe some of the overblown fears around potential bubbles or collapses. I don't know if that's been surprising for you too, Cosmo, because the first time you came on, I'm pretty sure was back in the dead of crypto winter, and now here we are, which kind of feels like summer. It kind of feels like crypto summer again. And so I'm just kind of curious if you think that's kind of natural too, because let's just put crypto aside for a second. You've lived through normal ups and downs, even in traditional markets. I mean, what do you kind of make of maybe some of those overblown fears, or maybe some of them being legit?
Well, there's always a bull case and a bear case in any market. In my daily trade journal, I write down what's the bull case, what's the bear case in the market today, and just to stay even keeled and level of where we are. Um, and the reality is we've had really strong performance for a few years now, so that certainly makes people feel a little offsides, or feel like they want to take profit. But but every day is kind of a new day. You need to reassess based on today's facts and data, and that, like, just because there's some just because something has gone on for a while doesn't mean it can't keep going. And so we do feel like, at least in the traditional markets, we feel like valuations are very extended, but there's not a lot of reasons for why it shouldn't go the opposite way, at least for now.
Mhm.
And then when you look at crypto, man, it's like I think we've barely even started. Like, for sure, Bitcoin has reached new highs, like is well above where it's traded in the past, and Bitcoin is already well into the mid innings. It's certainly not early innings. But when you look at when I think about crypto, I do think of it as there's Bitcoin, and then there's blockchain the technology, which is everything else. And for blockchain the technology, I think, man, we're just so early innings, because so many of the assets are still well below their 2022 highs in the public or the private market. Yet the underlying fundamentals, so the usage, the applications, the strength of the entrepreneurs, and the regulatory environment and opening up, is so much better than it was 2 years ago or even a year ago. Yet prices are below or the same, right? That just tells you that the risk reward for allocating to crypto is as good as it's been in many years, if not
I
better.
would agree. Yeah, I would agree with you on that. I think the one interesting thing that kind of comes back to all this as well is, sometimes there's a lot of investment opportunities, and you might get stretched too thin. I think one of the interesting trends now is, stablecoins. This all kind of, if we back up earlier in the year, Circle's IPO was kind of the proof point of like, look, there's legitimate demand here. Stablecoins have found product market fit in a large way. That's also why Tom Lee's Bitwine, I think, and you guys would know better than I would, kind of blew up, was that Tom Lee came out and said stable coins are the chat GPT moment of blockchains, and this is going to be huge. But now since then, we've had Tempo and some of these other stablecoin companies launch their own chains. And if that's the case, will some of this get siphoned off? Is there not enough activity on chain? Certainly, by the way, for us at Coinage, as a built on chain media outlet, we are here in the trenches trying to show some of the use cases that can be built on chain. So you already know my views, Cosmo. But is there some fear that maybe too much of like what had been built on chain could get stretched too thin before the BlackRocks of the world or the Apollos of the world continue to build and bring some of that money on chain? How do you see kind of like that playing out specifically over the next year or so?
Well, look, it's certainly exciting that more and more institutions feel like they can interact on chain, right? I fully believe that 5 years from now, we're sitting here, every single financial mobile app on your phone will be run on blockchain rails. Like, I strongly believe that will be the case. And so, but for that to happen, clearly all those large institutions have to start interacting with DeFi. And we are starting to see that, right? The SEC coming out is likely to come out with a safe harbor for institutions to interact with DeFi. Chairman Paul Atkins already said he wanted that to happen. And clearly the administration and our Congress is very pro innovation as well now, and pro business. And so I expect that it's not going to happen suddenly, but over the next 3, 6, 12 months, we're going to see more and more institutions really interact with DeFi in a big way, and discover all the benefits that will provide for their customers. And so, I do think that as that happens, DeFi activity, DeFi TVL, DeFi usage will grow exponentially.
Yeah, and it wasn't too long ago that we had you back on Coinage celebrating Pantera's 1000x on your Bitcoin fund. I guess to kind of wrap up this conversation on what's possible in the Solana camp now, with Helius as one of the main DATs to keep your eyes on in the space. I do wonder kind of how you expect a lot of this demand now with all of the new Solana DATs and what you guys are doing at Helius to kind of shape up what you might expect to see with Solana. I can't remember entirely if your price target has changed in terms of what you expect to play out here, but I don't know. It wasn't too long ago we had Tony on the show just kind of thinking about how far they've come from the bottom of 2020. It's already been a lot, but I think it's fair to say that Solana got tossed out with the bathwater in that crypto winter. And so now, like you said, we're back to kind of where we were. But what does Cosmo say about how much room to run there exists on Solana, the asset itself?
Yeah, I think the best way to describe this without, giving a specific price target or something is that we are so excited about HSDT and we're leaning in so much into Solana as a firm. Solana is our biggest position at the firm. It's over $1 billion that we manage of Solana. And so we care deeply that Solana can succeed. And that's why we care so deeply that HSDT does its mission of evangelizing Solana and helping people get access to Solana. And so part of the reason for that is the bull case on Solana, which is that Solana is just better, faster, cheaper, more accessible than traditional financial rails and than most other blockchains. And so, if you go back to, I always refer back to a lot of the case studies I've learned in my history. Like one of the biggest stocks of my career when I was a younger analyst in equities was Amazon. And Jeff Bezos would always say, there's the holy trinity of consumer wants. They are faster, cheaper, more convenient. And that's exactly what Solana is. And that's why my clarity of vision and conviction in Solana is so high. When you think about the upside, it's like, well, our Bitcoin fund is actually now 1500x since the beginning. So it's something like truly, truly absurd performance for the guys who came in for our first fund. But Bitcoin's now a 2 trillion plus asset, right? It's no longer a tiny asset. But Solana is still only 120 billion. And there's a 1500x for a Solana to achieve what Bitcoin has had. And so we do think that there's there's like a 10x for if there's Solana achieve what Bitcoin has had. So we think there's a massive opportunity. Solana in a lot of ways does more things than just Bitcoin does, right? It has transactions that generate true free cash flow that support a lot of diversity of applications. And so the fundamental story for Solana is actually extremely compelling. And that's why we're so excited about it.
Yeah, I guess, fitting that into how Solana, and this will be, I guess we're almost coming up at time here, but always love having you on the show. And obviously, again, it's a super exciting time for all this, but we're sitting at like a $4 trillion market cap, I think, right now in the total crypto space, which, just to put that in context too, still seems small depending on how big, if you're in your camp, or probably also the camp of all of our Coinage NFT holders as well. I guess, how do you put that $4 trillion number into context when you double down on what you just said?
Well, the way that I think about it is, there's really Bitcoin and then there's everything else. From Bitcoin perspective, Bitcoin is tackling global wealth. Gold is a $20 trillion asset. Bitcoin, I think, is a better version of gold. And, Bitcoin is roughly $2 trillion today. There's no reason Bitcoin can't go to 20 trillion and exceed that over time because it's a better version of gold. Now, when you remove Bitcoin from the equation, we're looking at $2 trillion of blockchain and technology. And when you think about it in that context, look, global equities is a $200 trillion asset class. And I believe blockchain technology is going to disrupt so many aspects of our global economy. At the very least, it's going to be very disruptive to financial institutions, which is 25% of global equity market cap. And so that's 50 billion. And so can we go from 2 billion of blockchain technology to 50 billion over time? 100%. How do we get there? Well, prices follow fundamentals. That's the number one lesson you learn as a hedge fund analyst is that prices follow fundamentals. And we are seeing the fundamentals improve, right? Solana is doing $3 billion of annualized free cash flow, up from 1 billion last year. That's 3x growth over a course of a year. Blockchains as an industry, an aggregator are doing $20 billion of free cash flow in blockchain applications. That's up from less than $5 billion this time last year. And so we're seeing this tremendous growth in free cash flow production, and that will only accelerate as we grow from tens of millions of users today to billions over time. And so that is why I'm so excited about the fundamental growth that exists, and that will drive prices up.
Oh, it's been wild to kind of watch how quickly you guys have been able to crank with these, not just Bitmine and the leading one in the Ethereum space, but then also what Dan Ives and 8Co and you guys launched over there, and now certainly as well, keeping an eye on it all the time. We'll be watching to see where shares in Helius continue to trade. But as always, Cosmo, can't thank you enough for coming on with us here at Coinage. Thanks again for the time, man. It's good to see you.
No, thanks so much, Zach. Thank you for letting me talk to you about the HSDT story. We're just so pumped to support HSDT, to support Solana, and to create value for everyone. So thanks again.
Right on, man. No, thank you. Cosmo Jiang there from Pantera Capital. Our appreciation and thanks as always. That's going to do it for this edition of Coinage. As always, you can check out the big headlines around the world of Web3 and the wider world of markets at coinage.media, and mint to co-own the experiment with us. For everybody here at Coinage, I'm Zach Guzman. We'll see you again soon.